Hey, are you terrified of losing the family home after separation? Welcome back to Real Talk Single Mums. If there's one thing that keeps us awake at 2 a.m. after a separation, it's the absolute panic around housing and finances. The thought of navigating mortgages, borrowing power, and property on a single income can feel like trying to learn a foreign language with a blindfold. I don't know about you, but when I separated, I had to move out of my family home, and it was the most scary and unbalanced I felt in a very long time. Going back into the rental market, I was unsure if I could ever afford a home that is my own, and especially now with the prices being so stupidly high. I constantly second-guessed myself and assumed that because my relationship status had changed, my ability to secure my family's future had also disappeared. I had no one to turn to back then. It was about 10 years ago. But these days, I'm surrounded by amazing women. And this is exactly why today I'm bringing in an absolute powerhouse to set the record straight. Joining me is Kylie Soltani. Kylie is the co-director and fully qualified mortgage broker at Soren Financial. She is known for cutting right through the overwhelming financial noise to give her clients a realistic, zero-fluff view of how lenders actually assess them. Her personal approach to lending is exactly what we need in this community. She handles highly complex lending scenarios every single day. And so, in today's episode, Kylie is going to break down exactly what you need to know to take back control of your financial future. We're diving into how lenders actually view child support, the government schemes that you probably don't even know that you qualify for, and the exact 3 things you need to do with your bank accounts this week to get yourself ready. She's here today to dismantle the myths, replace a financial panic with practical roadmap, and prove that we have far more options than we realize. All right, Kylie, welcome to the virtual studio. We're so incredibly thrilled to have you here.
Thank you so much for having me, Elle. It's really a pleasure and it's lovely to be here today. We've just survived the school holidays, only just. And we did also welcome a very inquisitive and very excitable mini Groodle puppy into our family. So life has certainly been quite chaotic lately. But like every other mum out there, I'm juggling. So
don't we get good at that? We are such pros at juggling everything we have to do. That's amazing.
Absolutely.
It's a great skill.
Absolutely. As you mentioned, I'm the co-director of Soren Financial, which my husband and I built together. We actually named the business after our son, Soren, so it's absolutely very much a family business. We've been in operation for around 7 years now, and we deal with unique and complex lending scenarios for our clients each and every day.
Great. Just the person we need, because I can guarantee you most of the mums listening would be thinking and turning off by now going, well, this is not going to apply to me because I'm on a single parenting payment, for example, or on a single wage, and there's just no way that I'm going to be able to afford a house ever. But I get you all to stay and wait, because I think throughout the interview, you'll find that there might be some glimmer of hope for you.
Absolutely.
You mentioned the co-director, and you help women in particular to navigate that scary reality of post-separation finances. But I wonder, what makes you carve out, you mentioned your puppy and everything else, what makes you carve out that time to share the specific financial expertise with our single mums today?
Yes. Well, actually, in terms of my history before becoming a mortgage broker, I spent 20 years as an architect leading development projects. And people often ask me whether that career in architecture and my career in finance are completely different. But I actually think they're more alike than people tend to realize. Because as an architect, everything starts from understanding those foundations. And you don't just jump straight into picking a paint color or selecting finishes. You first have to understand the site, understand the challenges, and really get a sense of what you're trying to build. And that's exactly the approach I take to finance today. So I like to bring that experience to give my clients a sense of planning and comfort and clarity. And what I often say to them is clarity really creates confidence.
For sure. That's absolutely true. Especially going back to these women that have just gone through a very traumatic event like a separation or divorce, the panic really sets in and it can feel like every financial choice has to happen immediately. We'll lose somehow everything, or someone will take advantage of us and we'll have less then. So saying that it's really good to have that foundation, but having this mindset of a client potentially of being in this pressure cooker, how do you help them build that plan instead of just reacting out of fear?
Yeah. Well, Elle, the first thing I try to do is to give people permission not to have all of the answers straight away and today. Because when you are going through a separation, everything can feel urgent. And part of what I like to work with my clients on is understanding and separating the decisions that really are urgent from the ones that simply feel urgent in that moment. So, for example, understanding your cash flow, making sure your existing mortgage payments are covered, or knowing when the right time is to refinance to align with a settlement or mediation timeline, those things can be genuinely time sensitive and time critical. Whereas on the other hand, decisions like deciding which lender you're going to eventually use, whether or not now is the right time to buy, or whether changing jobs today might be the best move for you, those decisions really benefit from taking a step back and really looking at the bigger picture. And once people realize they don't have to solve every problem or every challenge and make every decision this week, you really just start to see the pressure really lift. Because if everything feels urgent, nothing feels manageable. And so breaking everything into smaller, manageable steps really makes the whole process feel far less overwhelming.
And absolutely, that makes sense as well. It does. Everything when you separate kind of lends on you and covers you. And I keep saying, this is my interpretation of that time is that you're in this covered by this blanket of decisions. And, it's so hard to breathe through and to get out through that. And breaking things down into a smaller, manageable bites, or making holes in that blanket bit by bit. I can see how that would help. But there's still quite a lot of myths, damaging myths, you see, that impact how we single mums make our decisions about the ability to keep the family home. Or in fact, if we can't keep the family home and we have to buy the other person out or we have to move out to secure a new loan for ourselves, I can just see so many blocks, all these myths coming in, and straight away these eyes going vacant and going, well, no, that's no longer for me. And I'll go on a bit of a tangent here. I even remember when I separated and I went to see a bank that I've been with forever, and I wanted to refinance and to potentially look at getting something smaller for myself. And they just looked at me and said, oh, well, no, you're on a single parent pension now, come back to us when you're back in a relationship. And I was just like, what? It was just soul crushing.
Absolutely.
So women in these situations that are just being bombarded, is that still the same? What are the myths now? What's going on in that space?
Yeah. Look, Elle, you hit the nail on the head, really. Without question, the biggest myth that we hear is I'm now single on one income, and so no bank will lend to me. And we hear that almost weekly from our clients. However, the reality is that lenders don't actually assess you based on your relationship status. What they do look at is your income, assets, liabilities, and generally your overall financial position. So has separation changed the numbers? Yes. However, does it mean that you can't own a home or no bank will lend to you? Absolutely not. Every lender assesses their clients differently. And so that's why it's important to work with a broker, because we can take you to the lender who is the best fit for your unique circumstances. And what we do find is that many women are surprised to discover that they're actually in a stronger position than they might think once we structure everything in the best way to suit their circumstances. So the biggest mistake I see is people disqualifying themselves before they speak to somebody who specializes in these kind of separation situations.
So going directly to the bank was my mistake. I should have got a mortgage broker.
Yeah, absolutely. Absolutely.
Damn it.
That's what we're here for, is to guide you to the best fit lender for your unique and personal circumstances.
Fantastic. And so therefore, let's talk about the reality of relying on that single income, because if you're saying that that's not necessarily the a barrier, how do you mentioned some look differently at you. So how do lenders actually view the child support or parenting single payments when a mum is trying to prove that she can actually service that loan, and why, and I think you've already touched on that, why talking to one bank can severely limit those options.
Yeah. So child support or single parenting payments can absolutely help. What many people don't realize is that every lender does look at it a little bit differently. For example, one lender might use 100% of that child support payment towards your income. And that might be provisional upon that being a formal arrangement, or the fact that it might have been evidenced and continued historically for a period of time. And then you might go to another lender who'll only use a part of that income or that child support. And they might also have other requirements around how long it's expected to continue into the future and requirements around your children's age. So these are the reasons why getting that early advice really does matter, and it becomes extremely important, because if you only speak to one bank or one lender, you only hear that one bank's policy. And choosing the wrong lender for your circumstances might make it look like you don't actually qualify, when another lender might assess your exact same situation very, very differently. As a broker, we can look across multiple lenders and take you to and guide you to the lender who will assess your situation the most fairly.
Why do they do that? That is just so infuriating. I mean, I suppose you're borrowing this, your situation doesn't change, but they just pick and choose what they want. It's frustrating.
Yeah. And it depends on the lender's risk appetite, and it depends on the product they're offering. There are a lot of variables which we can help guide and navigate you through.
And so, okay, some of them will take into consideration your government payments. But what if your ability to work, your hours are impacted? So therefore, your income takes a hit because you're raising the kids, you're now working part-time. And so yet the prices of the houses keep growing. So how do things like that affect her being able to get her foothold into the property market?
Yeah, this is incredibly common, and we see all the time so many mums reduce their working hours, or they step away from work altogether whilst they're raising their children. And then suddenly they're expected to refinance or take out a new loan to buy a property on a very, very different income. The important thing for those mums to remember is that there usually isn't just one solution. So sometimes restructuring the loan to make mortgage repayments more manageable can help, and that might look like extending the loan term or changing their repayment types if that's appropriate. And it might also, again, just be simply finding the lender that best suits their circumstances. And sometimes just putting that plan into place to return to work and allowing enough time to establish a consistent work history before applying is the best move. And we've actually even seen some of our clients request more time and build more time into their mediation or settlement timeline, just to give them some flexibility when they're making that transition.
Right, that makes sense. And I suppose too, a lot of us, when we do go through that separation and divorce, just feel like that is this permanent state that we're going to be stuck in now forever. But I suppose it's not. It's just a short window of time. When I say short, sometimes it can be up to 3 or 4 or 5 years if someone goes to the courts. But at the end of the day, that will cease. And that there may be opportunities to, like you say, build up those reserves or build up the coffers, so to speak, so that they can look at getting that property or to refinance. That makes so much sense.
Yeah. And truthfully, sometimes the best strategy really comes right down to timing. So waiting a few months to strengthen your position can actually help in the long run open up significantly more lender options and can even improve your borrowing capacity. So the biggest mistake we see is people assuming that there are only 2 options available to them, and that's either I qualify for the loan or the refinance today, or I have to sell. Whereas in reality, there are several pathways available to them, and getting that early advice around those options and those pathways is super important. And even if you're not ready to refinance or buy today, understanding your options today can completely influence the decisions that you're making for planning for the next 6 to 12 months.
Well, yes, that makes so much sense. You deal with these complex separation cases rather every day. And So you often say that women aren't starting from zero, they're starting from experience. Can you walk us through what a 6-month preparation roadmap actually looks like for a mum returning to work and who wants to buy again?
Yeah, absolutely. Well, for every client, the roadmap is different, but we generally follow the same process. And so we start by understanding where are they at today. So we look at what income do they have, what debts have they accumulated, what savings have they built, and also what does their employment situation look like. And then we identify the crucial steps or what needs to happen before they're in the strongest possible borrowing position. So as we mentioned, that might mean returning to work and establishing further employment history, or it might mean reducing their debt, building their savings, or simply gathering up all the relevant and required documentation. So we'll constantly check in throughout that period just to make sure we're positioning the mum in the best possible position for the future application. And then by the time we're ready to apply, there's no guessing. So we know which lenders are likely to be a good fit for the individual, and we've put together the strongest application possible. So whilst every client's roadmap is different, the goal is always the same. So it's giving them the confidence that they're moving forward with a clear plan and they're not just crossing their fingers and hoping for the best, because we really do want our clients to leave that first meeting feeling a sense of relief and feeling a sense of, I finally know what I'm working towards. Because, that uncertainty is far scarier than working towards a plan.
Absolutely. And I have this favorite saying, you don't know what you don't know. And often that alone, just, you don't know what's available to you. So you don't even know what questions to ask. So to be able to go to someone and just say, this is where I'm at, help me either create a plan or help me see what's actually possible, help me find out what I do not know and which direction I can turn to achieve, is such a good thing to be able to do. We've spoken a lot about challenges. So we've talked about the diminishing income, the myths, etc. But is there any positives besides coming in to see you to build this plan? Are there any government schemes or any other options that single mums can really tap into that they wouldn't know about normally?
Yes, there are, in fact. And this is one of the reasons I always encourage people to reach out and have those early conversations, especially before they rule themselves out. So one of the first things we do, we don't actually think about lenders or even loans straight away. We first take a look at the individual client and we consider whether someone qualifies for any government support and anything that is offered that could strengthen their position. For example, eligible single parents can qualify to purchase with as little as a 2% deposit using the Australian government's 2% deposit scheme. And others who haven't owned a property for a minimum of 10 years, they could be eligible to purchase with as little as 5% deposit, and that's using the broader 5% first home buyer deposit scheme. So that's some advantages or opportunities that are available to them, along with, depending on what state you're in, there might also be some government grants or there might be some stamp duty concessions which can help a lot with upfront costs.
Did you mention that the 2% is for new buyers, or is it for any mum, like any buyer?
Yes, Elle, the Australian government single parent 2% deposit scheme is available to first home buyers. However, it is also available to eligible non-first home buyers who don't have or own a property at the time of their future purchase.
Well, that's really good.
And then there's another option, Elle, that many people actually don't think about, and that is a family security guarantee. So if you have a parent or a family member who has a property, they can actually contribute that property as security for the purchase. And it's like using part of that property as a deposit. And with some lenders, what that can allow you to do is borrow up to 107% of the purchase price of your new property. That then helps you to cover transaction costs such as stamp duty and other fees that are associated with the purchase.
Wow. Okay. So say like your mom or dad or whoever steps in and their property that they have, a percentage of it. So they basically go as guarantors.
Exactly. Yeah.
Nice.
And it's a security guarantee using your parents' security property for the loan.
Fantastic. That's great. I like how you have this in-depth insight into various ways of achieving these things. Like I didn't know about the guarantee. I mean, I know that a parent can go as guarantor in the event that you can't make the payments, but I wasn't aware that they could actually step in and offer a certain part of their home as guarantee to get that 107%. That's a lot of borrowing power. So that's amazing.
Yeah, absolutely. It really contributes to setting you up for success if you have that family support available. And these things are why one of my favorite conversations with my clients is when they come in thinking, I really didn't think I'd qualify for any help at all or qualify for a loan. And then we're able to show them there are options available that they simply didn't even know existed. So we always say, please don't make assumptions and assume you've got no options until you've explored every avenue and you had that conversation with the broker.
Absolutely. It makes perfect sense. So far, you've talked a lot about having a plan, but can you give me a real example of what that looked like for one of your clients?
Yes, of course. So one mum that really stands out to me was recently separated and was planning to return to work full time. And she had spent many years being a full-time mum and raising her children. And so like many of us, she felt this sense of urgency that she had to buy again immediately because she was worried that if she didn't, she'd miss her opportunity. But once we assessed her unique situation, we realized that the strongest strategy wasn't to, in fact, apply straight away. And that's when we mapped out the 6-month plan. So during that time, she was able to return to work. We established that solid employment history. We gathered the relevant return to work documentation from her employer. She continued building on her savings, and she also just avoided making any financial changes that could reduce her borrowing options in the future. And then what we found is by the time we applied for her home loan, she had more lender choices available. She had better borrowing capacity, and she felt really confident and comfortable through the process because she always knew what she was working towards. So those 6 months we spent together, those 6 months, they really weren't about waiting. They were really more about preparing and changing that narrative from let's apply today to let's spend the next 6 months putting together a plan to put you in the strongest possible position.
And that makes sense. And I suppose this is where I was sort of thinking about before, you, without going and seeing someone, without having a chat to someone, you kind of just go, well, I've only got this income. It's limited income. I'm barely scraping fortnight to fortnight. There's just no way. And this negativity creeps in and you kind of like just shut the windows of opportunity for yourself whereas if you go and talk to someone about it that knows what they're doing and have insight, whether you create a 3-month, a 6-month or a 12-month plan, straight away that it gives you a goal, gives you something positive to look forward to. And even if you have to tighten that belt over that 6-12 months, there's something that you're working towards, that's something that's yours and something that's going to be there for your kids. And it just makes so much more sense, doesn't it?
It absolutely does.
If I bring to mind freshly separated mum who wants to buy her own place, say in the next 12 months, and she really is going to take our advice today and will go and see a mortgage broker, what does she need to do with her bank accounts and her working history, everything? What does she have to do to make herself look flawless and make that planning path as easy as possible?
Yeah. So we always like our clients to think about that plan as the North Star. So something to guide you, right? And something positive to look forwards to. And when you are looking into, booking a conversation with a mortgage broker, I want you to think about 3 simple things. So firstly, I'd like you to get a really clear picture of your cash flow. And what I'd recommend, one of the easiest ways to do that is to have one account that your pay goes into for your income and one account for your transactions and your spendings. What that does is it makes it really easy to understand where your money is actually going. And it also helps you to identify where there might be opportunities for you to save. Then, if you bring that to us, it also helps us to have a really clear picture of your financial habits and your spending, and we can paint a really clear picture to the lender. The second thing that I would absolutely recommend is to build a genuine, consistent savings habit. So even if you're only saving $20 or $50 a week, that's far more powerful than making ad hoc, singular, lump sum savings deposits. And it really does show the lender, the reason for that is it really does show the lender that you are comfortably managing your finances.
Okay.
The third thing I would recommend is just be careful and considered about taking out any new financial commitments. So whether that be increasing your credit card limits or taking out buy now, pay later, or any new finance for that matter, only do it if it's genuinely necessary, because every financial commitment on your ledger forms part of the picture that the lender is going to use when they're assessing you for your loan, and it may affect your borrowing capacity. So those small decisions that you're making now can have a big difference and really affect your options 6 or 12 months from now.
So no Zip or Afterpay, regular savings, even if it's like small amounts, and 2 transactional accounts really, which kind of makes me... I'm out. I'm one of those people that has 10 different accounts and like uses it like little pockets.
Yes.
Saves for this in there, saves for that in there. But I suppose that wouldn't be too bad. They could still track it, but they'll just have to have a look over like 5 or 6 accounts.
Yeah. And with regards to buy now, pay later, I'm not saying a blanket, just don't do it. I just say do it in a very considered way. So really consider whether it's genuinely necessary and just understand the implications, because it does have an impact on your overall financial position. And when a lender is looking at your borrowing capacity, they're looking at any liabilities that you do have.
Fabulous. All right. So we've created a plan. We've then got our accounts and our savings, everything up to scratch. And we're finally ready to apply for a loan. The immediate instinct, for me at least, is to hunt down the absolute cheapest interest rate possible and chase that bank or that lending institution down. But is that the actual best strategy for a single mum, or am I missing the big picture?
I'd really encourage everyone not to simply chase the loan with the cheapest interest rate.
Really?
Because that right loan really, and that goes for single mums going through separation, and it goes for all of our clients really, because that right loan now isn't necessarily going to be the right loan for you in 5 or 10 years. So we do commonly see people make the mistake of comparing home loans or shopping for home loans like they would shop for groceries, and they're really just thinking about the price. Excuse me. But a home loan is something, it's not just a short-term transaction. It's something that you're going to have long into the future, up to 30 years. So it's really important to take a step back and to look at the bigger picture. It starts with choosing the right lender, not just the lowest rate, because as we've discussed, every lender has different policies, different borrowing calculators, and different strengths. So one lender might approve a loan amount that's significantly higher than another and assess your income in a way that's much better suited to your circumstances. This is going to become really important for someone who's rebuilding after a separation. So having access to the right lender can be far more valuable than saving a fraction of a % on an interest rate.
Yeah, I guess that makes sense. I don't know whether it's old school thinking, but I'm thinking a lender's a lender, a bank is a bank. Okay, some might take more into consideration my income fully, or some may think that I spend less than others. But at the end of the day, it's just a lender. So therefore, I'm kind of by comparing interest rate, I'm sort of thinking, well, they're all apples, so to speak, and they just vary in the interest. But what you're telling me is that they have different policies in place as well that would potentially not be favorable over time.
Yeah, absolutely. Because you're not just looking for the cheapest loan, you're looking for the right lender with the right policy, the right borrowing capacity to suit your income and circumstances, and also the right loan features to support that next chapter. An example of that might be going and seeking a loan that has a lower interest rate because it doesn't have an offset account or a redraw facility. And that might offer a fraction of a % of a lower interest rate. But if you are receiving that child support and you're building up your savings or you might have a tax refund coming. Having an offset account can save you far more in interest than just having that small difference in interest rate can.
Right. Oh, that makes sense for sure.
Yeah.
I get that.
That's why it's extremely important to focus on the overall strategy and not just the headline rate.
And then I guess that leads me to, that's wonderful. That's great. That's the mathematic, the numbers taken care of. But what of the emotional? Because we deal with women at a point in time of their life where they're already emotionally and physically exhausted. So before she goes through the process of seeking out the lenders, what's the absolute first piece of paper she needs to have, or the first phone call she needs to make? Besides to yourselves, of course.
Yeah, I would suggest that before you start thinking about a loan or lenders, the most important thing is, as you've touched on, gather all the relevant information. So starting with your loan statements, if you have an existing home loan, of course, your pay slips, your bank statements, and your credit card balances or any other liabilities. Also, really important when you're going through separation is to have any child support documentation available to you and your settlement or mediation documents. And once you've got all of those together, you can book a conversation with a broker who specializes in separation cases, because the earlier that they become involved, the more options that's going to open up for you down the track.
Fabulous. Fabulous. Okay, so we've talked about gathering the paperwork, which is a huge step. God, I wouldn't even know where to find half my paperwork. But anyway, we won't go there. I know so many mums who are also trying to navigate that change. Like we talked about the working hours, the additional responsibility, and doing all sorts of things to make the ends meet. And so I wonder, how do lenders actually view those changes? Is there anything else that we should know as to how the lenders would view all those changes for them?
Yeah, it's actually a really important question, Elle, because lenders don't just look at your income. They do really consider and look at your overall financial position. So if you've reduced your work hours, changed jobs, taken on additional financial commitments, or you have taken out that buy now, pay later that you were considering earlier, it doesn't mean you won't qualify for the loan, but it does influence how the lender will assess you through your application process. So, for example, changing jobs. It's not necessarily a bad thing. In fact, many lenders are okay with you being day one of new employment, especially if it is in a similar profession or the same role as you've been in historically. And likewise, having a buy now, pay later account, like so many of us do, doesn't automatically stop you from getting a home loan, but it is something that will be taken into account when assessing your borrowing power and your overall position. So in essence, life changes don't stop you from getting a home loan. They simply mean we need to find the lender that's the right fit and factor them into your circumstances.
Very cool. I am going personally through bit of a lending situation at the moment. Initially, I was thinking to myself, I'll never own a home, but I'm sort of going back onto that road of journey of discovery to see if that is at all possible. And I was actually blown away. And it really underlines that thought or example of the lenders being so different, is that one lender thought that my expenditure per month should sit around like a $4,000 or $5,000 mark. And I was flabbergasted to think that a lender would actually think that a person would have that much money to spend per month. Most of us are so frugal and we manage on a lot smaller expenditure. So yeah, it kind of, just talking with you now, it reminded me and underline how very important it is to speak to a few other ones, because they don't necessarily have the right kind of lens that they look through, especially for single mums who are so used to saving on this and going without that.
Absolutely. And on that subject, Elle, the lenders use something that they refer to, you might have heard referred to as HEM, or that's household expenditure measurement. So that's a benchmark that they use to assess your expenses based on your household makeup. So you might be a single mum with 2 dependents. They will apply, in your case, that $5,000 HEM benchmark when they're assessing your borrowing capacity.
That is just so ridiculous.
And you might say, there's no way I'm spending that much, but every lender has a different HEM metrics. So again, this is where that borrowing power comes in, because some lenders might accept lower HEM and some lenders might use higher HEM. And in some cases, we can actually make a case to use your actual expenses, which are in fact below HEM, And we do that by supporting your application with the relevant documentation.
So you could actually bypass their HEM by providing your own actual budget that you might be sticking to.
Yeah, I mean, it obviously adds a layer of complexity to the application process. And what you'd have to then do is show them bank account statements to support the expenses that you are putting forward. But for example, you might say, well, I don't spend any money on transport because I work from home. So it's not reasonable to expect that I'm spending $300 a month on transport. And so there are situations where we can put forward your narrative to the lender to support your unique situation.
Fabulous. I love that. I didn't even realize that was available. That's great. Oh, good to know. This is why you go to a broker.
Yes.
All right. Now, every episode, we give our mums a 60-second tool. So I wonder whether you would have one for us. What would be a 60-second thing that our mum, after listening or watching this episode, could do to put herself in a better position emotionally, mentally, physically, to be able to sort of start on that journey of securing her forever home?
I absolutely love your 60-second tool and reset, Elle, and I'd be happy to offer one for your community today.
Brilliant.
So what I would ask everyone to do is once you finish listening today, log into your internet banking app. And if you don't have one already, open up a savings account. What I want you to do is name it something that's meaningful. So that might be a new foundation or my fresh start. And then I want you to go and just transfer into that account just $10, because it's not about the amount that you transfer. It's about changing and challenging your existing mindset. So going from financial defense to proactive recovery, and going from the mindset of everything is happening to me to I'm really taking back control.
Yes.
So what we want to see is that one small action can build momentum and create change for some much bigger changes in the future.
I love it. That's such a simple thing to do, but there's especially that two things you said there, the retaking back control and being proactive. That is just through small little steps, such an important thing to do at this stage. And $10, I mean, hell, who doesn't have $10?
Costs you $10 for a coffee almost these days.
Oh my God, doesn't it just? It's just crazy. Yeah. And then potentially have that regularly being deducted from your account as well. So you don't even see it going into there. And there you go. You've got a savings account to show your bank at the end of 6 months.
Absolutely.
Sweet. I love it. That is such an easy tool and such a, easy thing to do. It's achievable for most of our mums listening. So I encourage you guys to go and do that. Now, your team, Kylie, at Soren Financial is clearly passionate about helping people to move forward with confidence and a wealth of information. And if there's a mum listening or watching who is ready to either start planning or to find out her actual borrowing capacity, how can your services help her?
Well, one thing we do very differently is that we don't start with the loan or the loan products. So we start with your individual and unique and personal story. Because we know that every separation is different. It has different settlement arrangements, different parenting arrangements, different incomes, and ultimately different goals coming out of it. So before recommending any lender, we spend time really understanding what your next chapter will look like. And sometimes that means helping someone keep that home. Sometimes that means showing them what their borrowing potential is to help them buy their next home. And sometimes it just means helping them put that plan that we've talked so much about today in place so that they're really ready when the timing is right. So we're completely comfortable giving that advice because we'd rather help someone make the right decision than simply the quickest decision. And we'd rather give that honest advice than rushing someone into the wrong home loan. So we see our role at Soren Financial as not just arranging finance. We see it as helping people move forward with a plan and with confidence.
Fabulous. I love it. That's such a holistic way to do it. And so transparent. You're in it to help rather than just to get another client, which unfortunately in this world we have so many cases of. So it's really lovely to hear that. And so then if a mum is ready to take that scary step, who does she reach out to and We're very happy to put links at the end of this episode. But is there any specific place that you'd like them to connect with you and book a time?
Yeah, the easiest place to connect with me would be via the Soren Financial website, and we'll provide those links. On that, we'll also provide another link, but also on the website, you can book an obligation-free chat directly with me. So
Great.
even if you're not ready to apply for a loan now, then that's perfectly okay. There's no
Start
pressure.
that plan.
Yeah, sometimes just have that first conversation. Let's have a chat. Let's have that first conversation, and that could go to replacing a lot of uncertainty for you with a clear plan or a roadmap for the future. I would say the biggest mistake you can make today is not doing anything at all.
Yeah. Allow yourself to make that call. And I think don't be scared to hear no, because it may not be a no, it might be not yet.
Exactly. And as we've said, you may find that there are more options available to you than you had originally thought.
Fabulous. I love it. I really love it. Thank you, Kylie. We've spoken so much today about the importance of getting that advice early and having that plan. But I imagine there will be lots of mums listening who are thinking, well, I wish I'd done this 6 months ago, or even I've already made some decisions that are not quite aligned. Maybe I've missed my chance. What would you say to them?
I would say to those mums that it's almost never too late to get advice. So really actively seek out that advice. You know, of course, getting the advice early does sometimes give you more options. And we have spoken a lot today about that forward planning. But we also acknowledge that life doesn't always happen that way, especially during a separation when there's a lot of uncertainty. So I've worked with people who've come to us after they'd already signed their settlement, or after they'd already changed jobs, or after they'd made financial decisions that they thought would close a lot of doors for them. More often than not, there were still options available. They may not have been the same options that were available 6 months ago, but there was still a pathway for them to move forward. So that's why, please, I encourage everyone not to just make assumptions about what's possible. And whether you're thinking, I'm ready today or I'm still 6 months away, let's have the conversation and give you that clarity. And then once you have that clarity, you can stop guessing and you can make informed decisions.
Fabulous. I love that. Informed decisions all the way. Never say never. Just fill your head with all the information you possibly can and then keep moving forward. Amazing. Kylie, thank you so much for bringing such practical clarity to a topic that can be a bit dry, but at the end of the day can keep us awake at night as well. And so I'd like to say a big, big thank you for coming on with us today and just shining a light and info and encouraging us to not get discouraged, but to try, open the door, ask the questions. You never know.
Thank you so much for having me, Elle. I really appreciate the opportunity to connect with the Beanstalk Single Mums community.
Well, thanks, love. I really appreciate that. We look forward to sending a lot of mums your way and having you back with us again too.
Thank you so much.
Thanks. Well, that was interesting and insightful, and I dare say a little bit inspiring. Don't give up, mum. If you're watching or listening, I would like you to drop a comment below right now and tell me, what is your biggest financial hurdle? Or what is one win that you've had since starting again? Don't forget, you're not alone. We're all in this together. And don't forget to grab the links in the show notes to connect with Kylie. And I will see you in the next episode. Bye.